Look at how textbook these flags are. Look at how textbook they are. It's like 5-star. And then you look at DVAC. DVAC 2 had 5-star flags. Do you have a built-in position sizing calculator? Really? Guys, it's 3rd grade math, guys. Position size calculation is 3rd grade math. Come on, guys. You don't need a position size calculator. Yeah, it's a rough estimate. I never use position size calculators. Or so, yeah, you know. It's a simple math. The main problem with most traders, do you know what it is? A lot of people overanalyze their trades. They get all these software, fancy software. But the problem is, if you can't see the forest for the trees in your trading, analyzing your trades are not gonna help you. Like, it's not gonna help you see the trees, or sorry, the forest for the trees. Right? I have all these day traders overanalyzing the trades. It's, you know, if you just increased your time frames, boom, you're gonna triple your profitability. Mind blown. I don't know anyone who trades as big of an account as me. It's kind of sad, really. I think it's kind of sad. I mean, it's not rocket science to get to this level. It really is not. And I find it amazing I haven't found anyone. It's just a bunch of people selling subscriptions and pumping, and it's so fucking pathetic. How do you get the over-emotionally seeing unrealized profits fade on swings? Don't look at your P&L. Boom, problem solved. Guys, I'm telling you, imagination is the biggest superpower you can have in trading. You need imagination. If you can't imagine something making a big move, you're never gonna catch a big move. Well, on the short side, it's easier. On short side, it's such simple math. It's just simple math. Because you know the targets, right? Let's say, you know, you can just do simple math. Oh, 42% to get to the 10-day. It's easy. But then it's on the upside. That's why you need trailing stops. The randomly selling into strength, it's just not gonna work out well. Day trading crypto? Ugh. Who the fuck day trades crypto? Those things make enormous moves. There's one thing I mean, oh my god. Why would you ever want to day trade crypto? That's like the dumbest thing I've ever heard. They make enormous moves. No reason to day trade them. Now imagine being a day trader, buying SHIB here and sell it here. What the fuck is the point? Really? What the fuck is the point? Or you just go to sleep and catch a move like this. The point is the 100x leverage. Well, all these guys blow up. Every single person who uses 100x leverage consistently, they will blow up. It's just a mathematical certainty. But I am not a fan of advocating day trading for anyone. I wish I never found day trading. Just an epic waste of time. And yes, it's true. I made my first million mostly from day trading. But if I skipped day trading and started swing trading, I would have made like 2 million by that time. Guys, like, you have to understand, day trading is so much more difficult. You're always fighting near your entry. It's an illusion. Oh, like you can control your risk. The thing is, your margins are so thin. You have no margin of error. And just a couple of mistakes can wipe out, you know, months of profits. In swing trading, it's not the same. So much easier. You can be drunk in swing trade. And also, day trading is not scalable. You know, good luck day trading with $100 million account. You know, you can't double, triple. I mean, it's so hard to make any meaningful returns. And there's maybe only like 5 stocks you could trade, you know, that are liquid enough. Like small and micro caps, that's where my setups work the best. Well, ADR matters because you want to weed out the slower moving names. Like, generally, you never want to be in a stock that has ADR of, say, 1.5 or 2 or 2.5 if you have a small account. You want to, as much as possible, be in the stocks with higher ADRs than that. But if you're a position trader, yes, you can, especially if you have a larger account, being in a stock that has like 2.5 ADR, it's not an issue. They can still make big moves if you're willing to wait many months. But for someone who has a tiny account, less than let's say definitely less than 1 million, there's no reason to ever be long a stock that has ADR of less than 5. Well, no. I mean, I think you should always have a trailing stop on partial to get the home runs. But I think you may want to, sell some more aggressively. Like, that's the beauty of swing trading and increasing your time frames, increasing the risk reward. You don't have to be perfect. You have higher margin of error than when day trading. You don't have to use as much brain power in swing trading. You just need to zoom out and focus more on the forest than on the branches on individual trees. And things will become much easier. But what is difficult is focusing on the right stocks. Like, I feel that's maybe the hardest thing. I see it all the time. Like, people ask about setups, but you need to be able to weed out the random stocks. Just because a stock has a flag or some setup doesn't mean you should trade it. There's just too much randomness. You need to get the randomness out. That's the hardest part, I think. The randomly selling into strength is not a good strategy. It's a loser strategy. You can make money off of it, but you're never gonna make spectacular returns. It had a much better setup. These types of setups are much better when they make a big move. They double, triple, especially these small micro cap ones, and then have a high volume breakout of a flag. This is, those are the best. Something like this, when you have all these declining moving averages, I prefer clean ones. Yeah, it's a good looking one. I think it's, ideal a few more days of sideways, but this thing looks ready. But again, I understand this is a commodity related stock, oil, gas. The whole sector needs to go. It's just one of many setups in the sector. Why do I think so many traders speak so highly on Marketsmith? I don't know. I think it's a extremely mediocre software. I'm always constantly trying to, get rid of it, but I just like the way they represent the data here. Like this data box, this is what I really like about them. Like, I also use Coifin, but it's more, I just want this kind of data box. That has a lot of value for me. And also this data box. Everything else is just a waste of time. The charting is horrible. It would be better if they just pack up their offices and go retire. That would be better for everyone, I think. Yeah, a lot of people have affiliate programs with Marketsmith because, most traders are useless and they need to sell services to survive. Tesla, I'm just trading it off the 60-minute chart. It had a high tide flag on the 60-minute chart. These types of moves, they can become runaway. It just keeps going to 1500. That was my thesis. I was like, okay, I'll risk 10, 12 bucks to potentially make 100, 200. I've seen so many of these runaway moves on Tesla. It looks extended, but it just keeps grinding. No, I barely use market orders anymore. Only on Lucid because it's incredibly liquid, and Tesla too. These things are so liquid, it doesn't matter. But no, I don't use market orders anymore. I just can't. The slippage is too much. You know what? I'm gonna go and study the move on AMC on the hourly chart. So this was the first breakout on extreme volume. I pulled back to the 10-day and then it just kept going and going and going. Look at this 60-minute. Look at this hourly breakout. Look at this high tide flag. Gapped up and then just went. Opportunities like this, these extreme momentum stocks with extreme volume, and you're thinking they're too high and they're gonna double one more time. This is where the money is, and I really try to study these. Same thing with NIO last year. I totally underestimated it every time. Look at these high tide flags it had. Had a gap up and just kept going and going. You know, you guys post all these random charts. But you know, these are the ones you're gonna make the money. The high momentum stocks. And ironically, some momentum traders avoid those. But that's where the money is. There's a Fed meeting like every week. It's so funny. People are like, oh, there's a Fed meeting. Everything is gonna go to shit. Who cares? And guys, remember, this is day one, okay? It doesn't matter if it ends up 100%. This is day one. I don't short day one. I have too many scars from day one. Oh, yeah, task. Oh, holy shit, this thing more than doubled. Oh man, guys, this is called the small account edge. You have an EP on a recent IPO. This is what happens. So thin. Small account edge. CPRI. It just doesn't look like a stock that that's a great EP stock. It's very mean reverting. Apparel manufacturing. Like, you know, this is not an exciting sector. Everyone wants to trade these EPs and no one has done the studies on them. It's kind of funny. That's the problem. People just want to trade, but they don't want to get good at this. A lot of these, you know, single, double, $1, $2 stocks, most of them are pumps. Chat rooms pushing them. That's the problem with these low priced ones. Well, on these very explosive stocks, sometimes, you know, it is flagging on the 60, but yeah. You're trading it on your own risk. When a stock stops you out on the same day you open the trade, how do you decide to jump in again? Thanks. When it takes out the highs of the day. Where should you guys bought it? Hint, early August. Look at the numbers. Look at this. This is what you want to see on an EP. Forget about all of these Fastly and QCAM. They all look like shit. QCAM is super slow. These are the stocks. If you have a small account, these are the ones you're gonna focus on. The ones that gap over any kind of, you know, resistance and, you know, there's nothing there, right? It's just free air. No moving averages above. You know, these are the ones. There were so many last earnings season. There's so many. I didn't even see this until today. But if I had a small account, I would have wanted to be in this thing. This is why I'm trying to use the weekly charts a little bit more, because they're so much cleaner. They're so much cleaner. I'm using both the weekly and the monthly, because sometimes you don't see it on a daily, but you see it on the weekly or monthly, for example. How did I pick my MAs? I don't know. I don't remember. 65 EMA. The logic, actually, the 65 EMA, I heard about on the daily chart. The logic behind the 65 EMA on the daily chart, I'm gonna show you guys, is, especially among like can slim people, is that sometimes, a lot of times these, you know, like leading stocks, etc., you know, they usually obey the 50-day on the way up, but sometimes they have these shakeouts below the 50-day, and this ALB is a good example, but look at where they found support instead, the 65 EMA. But I don't use this thing on the daily, I use it on the hourly. Why? I don't know, it kind of works. It doesn't matter, guys. This moving, you can use whatever. Who cares? You can use whatever. You can use the 9 EMA, the 17 front weighted, it doesn't fucking matter. But I would recommend you use one that is faster, one that's slower, one that's even slower, etc, etc. Yeah, these indicators, they're just, you know, they're there for fun, right? They don't really... We imagine those things matter, sometimes they don't. Sometimes they do. You don't need any indicators. You really don't. You really don't need any indicators except for volume. And if I started trading from the beginning, I wouldn't even use the share volume indicator. I would use a dollar volume indicator. You think I'm gonna be a billionaire trader without other people's money? I think so too. I have the tools. I have the tools to get there. I have the process. I just need, you know, good markets. But you know, you know, looking at the Nasdaq, I mean, you know, the longer this straight up action continues, the you know, it's not gonna go on forever, right? It's kind of slow compared to the 90s, but still, you know, the expected forward returns are gonna be smaller and smaller the more we go straight up. But it would be nice to get a blow off. Like, let's say we're gonna straight line to 20,000. That would be like a dream scenario. How do you measure if the market is extended? Well, you can kind of see it. You know, you can use your eyes. I mean, you don't need to be a genius to understand that the market starts acting like, you know, the market has gone, you know, done something like this for 10 years, 12 years. You know, it's not gonna keep on doing that forever, right? Because that's not what markets do. Markets can also do this. They can also do this. They can do this. They can do, you know, this. Markets can do nothing for a long time. Yeah, guys, also you have to understand something. The 90s is happening in crypto. That's where the speculation money is right now. Yeah, but Minervini, you know, front runs his followers. And he's also training Peanut account to get those returns. The guy should be a billionaire, he's not. No, I haven't found like earnings, or not earnings, like negative EPs. Yeah, no, it's not really a thing, because stocks, it's partially about math, but it's also stocks don't act the same on the downside. It's much harder to short. Shorting is such a hard game. In a bear market, sure, in a bear market, but still shorting, even shorting in a bear market is super difficult, or in bearish environments. It's not as easy as you think it is. Or as you may think it. It's just a whole different game. It's just much trickier than going long. Going long, like, you know, any retard can make money going long. I mean, shorting is just a much mentally and tactically demanding game. It really is. It's just so much harder. People have no idea what they're doing. A lot of people. They just want to make trades. People want to make trades. They don't spend time on, you know, studying the markets. Like, how do stocks move? When do they move? How do they move? What makes them move? You know, people just want to make trades, including me. I do a lot of random trades that I know I shouldn't do. But, you know, it's hard. It's difficult. That's why so few people who actually make money from active trading, and even fewer that make, you know, like really big money. It's really power loss in this business.